BYDFI. What is up, everybody? Divine Hood here, coming at you with another daily update on Bitcoin and the crypto markets. Welcome in, everybody. Happy Friday to you all. What's up, Mark Dutch? Thank you for joining. Welcome into the mods. How is everybody doing? Guys, we finally got what we were looking for. We talked about this in yesterday's stream, but I did talk about the liquidity grab at the bottom of the range. And yes, we did talk about a long in this area being our local golden pocket and the Pitchfork midline. But I did post as soon as we were getting down there in the in the Telegram group that I was not interested in taking that long because we were not seeing proper confirmations to take that long. And we did drop. Actually, it wasn't that guy there. It was this one. This golden pocket and Pitchfork midline and POC right here. And we dropped straight through it. No confirmations to enter the trade. I told you guys I was not going to be entering the trade. And we just dropped straight through it. But yesterday, we talked about yesterday. First of all, let me ask this in the chat. Is the sound okay? Voice okay here? Can you guys see the screen okay? Everything looking good as far as that goes? Let me just double check. All right, cool. Looks like it's good on my end here. So yeah, guys, we saw the drop to grab our range of liquidity. And I talked about this yesterday, but oftentimes when we have a range where we have liquidity that is resting right below those range lows, and we do not often see the market makers leave that liquidity. Of all the late longers that have been longing for the last 2.5 weeks, a bunch of longs have been building up in this range, specifically after that first retrace from the all-time high. We had a lot of longs longing in this general area here and setting their stops below that low. And we don't oftentimes see the market makers leave that liquidity. And really, we were even looking at our really dead cat low at 115.2, where we wanted to come down to at least grab that liquidity, grab all that key liquidity that was resting down there. It was a lot of liquidity that was building up. And last night, or depending on where you're at in the world, we finally got that rejection yesterday from the value area high, and we dropped down to finally grab our range liquidity of the range lows. And that is kind of what we have been waiting for over a week here. We've been waiting for that liquidity grab. Now that we have grabbed liquidity on the lows of the range, are we going to grab liquidity of the highs of the range or continue to break into new levels of price discovery? So I would say this is a good sign, and it is a good sign right now that we are getting above the value area low of our range. This is a very important value area, and if we are going to reject in this general area here, then we could expect more downside. And if we pull this range to earlier today, you can see earlier today, our value area low was a little bit higher on the charts, and we did see that rejection on the bearish backtest earlier today. And that honestly looked bad for me. I posted in the Jason's Discord, and also I think it was in the Telegram as well, that bearish backtest there was not a good sign. But we did overall make a higher low on the charts. Now, if we look at this little Fibonacci pull, let's just zoom in and look at these today's price action from the lows that we created really last night to our highs that we created earlier this morning, and we turn on that 886. This is a little bit bearish for me because we did tap into our 886 Fibonacci. Let's make that yellow so you guys can see that a little bit better. And generally in a bigger trend for the past week or so, actually, really for the past 2 weeks since our all-time high, our trend has been sideways and down. And so now that we have come and hit this 886 locally here, there is a chance that we do come back down again and grab these lows and continue the dump to the downside. But I will say this, now pulling our volume profile to current price action, and if we pull this volume profile to current price action, we are above the value area low. So oftentimes you will see a deviation below the value area low to grab your range low liquidity. And then once you grab that liquidity, if you re-enter back within the volume profile, you do have a high chance of pumping at least to the point of control, or oftentimes filling that volume profile. We do know now that there is some key liquidity that is resting above the value area high into our daily level at about 120K. So it is a good sign, but I do want to give one word of caution. Earlier today, we had an attempt to break that value area low, and that attempt was this high at $116,800. And if we do come up, grab the liquidity of this high here, and then start to lose our value area low again, this could be a really bad sign that we are really about to break this range to the downside and potentially drop all the way to about 111.7 to about 112K, depending on time. And the reason why I'm looking at that as our next major level of support, yes, we do have some minor levels within that area, but that is our pitchfork. Now, our pitchfork band, our lower band, you can see that we did reject from the upper band up here. It was also our 1.618 Fibonacci extinction pull. And if we do lose that area, or if we do drop down to this area, it would invalidate our impulse from 98.2K. But this would be the next level of support, next big level of pitchfork support, where I would be expecting some sort of bounce within this general area between like 111.7 down to about 110.3, 110.2. So that's kind of what I'm looking at here. And we're actually coming up right now to test this liquidity, our local internal daily liquidity. And if we grab these highs and start to lose our value area low, it's honestly going to look pretty bad for Bitcoin. But we do have some bullish signs on the chart. Money flow is coming to the upside, about to cross over into the green on the hourly chart. If we go onto the 4-hourly chart, you can see our momentum wave is bottomed out here, and our money flow does look like it's trying to come up again here. It's about to cross over into the red, so we really need this zero line to be acting as support and our money flow to start coming up again, because if it does cross over into the red, this is going to be real trouble, and we could probably expect another lower high before ultimately dropping back down and coming down to 112K. So let me say hello to everyone. Welcome in, guys. Welcome in, Alex Kajus, Mark Dutch, Ludong, Dead Cat, Brandon. Welcome in, everybody. MJ25, thank you for the super chat, man. Thanks for the soul trade. Yes, I did post that soul trade yesterday, guys, and we talked about it during the stream, so I posted it after the stream a bit late in the Telegram, but that played out exactly like we expected it to, and I took profit exactly at the lows at 175.6, and at least on MEXC, they filled at 175.6. So we shorted that level. I was a little bit late, 188. I shorted 188 and came down to 175.6. So very nice trade. MJ25, thank you so much for the super chat. I really appreciate that. And yes, we're going to keep those coming. We're going to look for some more scalp opportunities today. And so yeah, guys, first off, let's just discuss Bitcoin a little bit real quick here. You know, I do think this liquidity grab was a very, very important liquidity grab. Now that we have grabbed the liquidity of the bottom of the range, we are really going to make a decision here. You can see there's not much liquidity up above the highs, to be honest here. There is not much liquidity. And even if we zoom out, let's zoom out to the past month of price action. Honestly, most of the liquidity is below us. Come on. There we go. Yeah, and most of the liquidity is still below us. There is not much liquidity above us. And that's a little bit of a concern here, because oftentimes that liquidity acts as a magnet, and the market makers will kind of hunt that liquidity. And if there's no liquidity up there, there's no reason to. We also do know we have some bearish catalysts in the market. So let me go ahead and pull up my Telegram real quick. We posted about this in the Telegram channel. Let's see. But one of the things that we were looking at here is Galaxy Digital is starting to offload a bunch of their Bitcoin. And anytime you see a bunch of spot Bitcoin get offloaded into the market, it's generally a sell signal. And we are seeing a bunch of Bitcoin. I think it was like $1.2 billion worth of Bitcoin getting potentially offloaded on various exchanges here. And that, to me, is a warning sign here. We could really see Bitcoin start to, start to dump if that occurs. So you guys can see here, let's see, where was it here? Galaxy Digital, a few hours, this was yesterday, deposited 10,000 Bitcoin, approximately 1.18 billion into multiple major exchanges, and just offloading that Bitcoin there. So very concerning for me. Let me get rid of that. And this could be our bearish catalyst that causes us to dump more, to invalidate this impulse from 98.2K. And if there is real spot selling pressure on billions of dollars of Bitcoin, that could cause us to drop a little bit here. We are also seeing the bearish catalyst happen before the bearish technical signals on the chart before. So, and this money flow is going to dictate that overall trend, and that money flow is still coming down here on some higher time frames. If we zoom out to the 8-hour time frame, 8-hour money flow is finally starting to actually dip here, and you can see from our all-time highs, our money flow is just making lower highs, slowly draining out of the asset as this range was forming, and we're really starting to get that kind of more steep drop in money flow. So we need Bitcoin to reclaim the value area low, to close the daily candle above this value area low, and really we want to see it start to pump up, even breaking back above our Pitchfork midline. But speaking of this Pitchfork, we do have, this is the Pitchfork pulled from the lows of wave 4 of last year's range on our weekly impulse. And, we were holding it overall as support. Let me hide this range here so you guys can see this a little bit better. The midline was holding as support. Yes, we did see some wickish past that, but you can see yesterday when we finally broke it, we did get that volume supported big imbalance candle to the downside. And one of the things we could just be doing now is we could, after grabbing liquidity, we could just be seeing a small bounce to fill that imbalance before finally crashing back down and coming much, much lower here on the charts. So we do need to be aware of that. We are seeing some bearish catalysts here. Zooming out onto the daily time frame. Daily time frame, okay, no red dot yet here on the daily time frame, but you can see our momentum wave is looking pretty bearish, and that money flow is also about to cross over into the red on the daily time frame. Not looking good here. I really want to see this hold and start to come up soon here. So I guess today's daily close is going to be a very, very important daily close, whether we are going to get continuation to the downside or we are going to just end up with that liquidity grab before coming higher. Okay, let's see here. What's up, Diago Carvella? How's it going, man? Let's pump. Yeah, let's pump. I would like to pump too. I'm long now on a couple coins, so I would like to see this pump happen. Do I think Sui has finished the fourth wave correction yet? Well, we can go into Sui in just a second here, but potentially yes, it has. I guess it's really going to depend, because if Bitcoin does have a lot of sell pressure and Bitcoin really starts breaking down, we know the altcoins are going to follow. Also, as far as time goes, our time is not exactly the best aligning with our impulse. So if we zoom out here, we just go to the 6-hour chart here. I guess actually now, yes, it is. It's been long enough. So I do think that we could see, let's do this. That was 6 days, 6 hours, and then this was definitely shorter than that. So yeah, our fourth wave could be in here. We could be about to pump. We'll cover Sui here as well. Sui, it's just a shame that we didn't come just a little bit lower to that 347 level, where we do have that 0.5 in confluence with our point of control of our major range. So, but we are starting to reclaim that channel, and we did say there would be some chop around this channel. Now, if we're going to explode out of this, we really need to start pushing here. We really need to start pushing soon on Sui. Knowing that it's a Thursday and then tomorrow, or today, Friday, excuse me, knowing that it's a Friday and tomorrow's the weekend, that range might continue a bit more. And hopefully it continues to range and not dump. But okay, going back to Bitcoin. So yeah, Bitcoin is at that key, we're at a key decision point right now. We really need to reclaim this value area low. I actually want to zoom in here. I'm really watching this SFP here, because if we do like SFP just like we just did here, and we start to lose the value area low, I mean, this is going to look pretty bad here, and we might be able to even take a short upon the loss of that value area low. Stops would go above the local highs, and honestly, my ultimate TP would be down around that 112K area. We would have some TPs before that, but that could be a short trade that we're looking at here. Let's zoom in a little bit on the 12-minute and see if we do have confirmation. No, not really. No bear divs here. Money flows crossing into the green. Looks pretty healthy here on both NAMI and Market Cipher B. We did just print that hidden bull div earlier on this little rejection of the value area low. Hidden bull div printed, so we made a higher low. flipped the VWAP to support, and now we're continuing to push up. So I really want to see us, instead of losing this value area low, I would like for us to keep pushing through this. We really need to start pushing through these internal lows here from earlier today and work our way up to that point of control. But also, guys, on Bitcoin, I posted about this yesterday. We do have, so if we take a Fibonacci from our rejection highs on Thursday down to our lows, and we turn on that golden pocket, that golden pocket is going to be coming in right around our point of control. And that could be our area if we are going to, we grab the liquidity. Now, if we come up to fair value and we see sellers sell at fair value, then that could be a signal that we're going to break this thing down as well. So we also we need to be watching that point of control area, that generally 117 to 118K, 117.9 to 118K. And if we even take our Fibonacci and just bring it to like the last highs before that, you can see that it's lining really, really nicely with the Pitchfork midline. And so this general area in here, I would say, is going to be kind of a big area of resistance that Bitcoin is really going to need to work through, because that Pitchfork midline was holding as support for a majority of this range over the last 2.5 weeks. Now that we've lost it kind of with some volume to the downside here, if we come back up to it and bearishly backtest it and reject from that area, it could be a sign that, we're about to kind of nuke here. We'll just have to see how this plays out, guys. We're live during the stream now. We'll keep an eye on Bitcoin as Bitcoin is doing its thing. I am long from the liquidity grab, and my stop, unfortunately, was below the lows, so we didn't get stopped out earlier this morning, and I'm just looking to ride this up. But my first TP will be in this general area. It's only going to be a very small TP, probably 20% of the position, because we could, now that we've grabbed the lows, we could start to really break this thing up into new levels of price discovery. Also, if we zoom out and we look at that impulse to the downside, or that impulse to the upside, excuse me, from 98.2K, and we pull that Fibonacci, you can see that that wave 4 target has finally been met, hitting the 0.5. So we finally tapped into our 0.5 Fibonacci right there. And now that we've kind of seen this complex correction down to that 0.5, if our overall double 1 2 impulse is going to stay intact, 1 2 1 2, and then there's your 3, here's your 4 5 4 5, we really want to see that 0.5 hold. We want to see this liquidity grab kind of be the lows, and we want to start to impulse in a wave 5 here. We want to start to see a 5-wave impulse to the upside. Now, going into the weekend, that's not the best time to be looking for an impulse to the upside, but we have seen weekend pumps before, so I'm not putting it out of the question. Today, I know I've said this like 5 times already, today's going to be a very important daily close. So we'll just keep an eye on this. Looks like so far we are starting to get a little bit of a rejection from those internal highs. Money flow does look good, though. We are seeing very slight bear dips here on the chart, both regionally. Actually, is that? No, just this little guy here. Some bear dips, but money flow is going to overpower that. So money flow is still looking good. Now that we've taken this little liquidity from earlier today, if we do something like this and bounce from the value area low, that would be nice to see. We would be confirming a local flip to support to continue to work our way up to the next resistance area. But if we start to lose that, man, it's not looking good for Bitcoin. It's not looking good for Bitcoin. And if Bitcoin really starts to dump, we know the alts will follow. I mean, Bitcoin's the king, and if Bitcoin starts dumping, alts will follow as well. So let's zoom back out to the 2-hour chart, and let's check out dominance real quick. See how dominance is looking. Dominance is holding overall. Let's do the 4-hour chart. Dominance is holding overall our channel bottom, and now that we've seen a little bit of a fake out of the channel, we've gotten back in the channel. We still are not able to truly reclaim our prior lows, and that's going to be a very, very important thing. We want to be able to reclaim these prior lows here. So we tried it. We attempted it a couple times over the past days or so. You can see we did have a 4-hour push above it, but lost it right away. And we want to see now this backtest, hold this support, and then start to get above that. We really do not want to lose this channel again. And if we start to lose this channel again, that's when the big dump in dominance could come. Now, if you're an altcoin trader like I am, or if you're focused on altcoins right now, this would be a good thing. This would mean altcoins are rallying against Bitcoin, or just not dumping as much as Bitcoin if Bitcoin's really going to dump. But you know, that's kind of unlikely to me. If Bitcoin dumps, I think the other coins are going to dump as well. So yeah, like going into the weekend, and it's possible that we just do form a range around the bottom of the channel. It maybe will build as support, hold as support, and then it continues to push up, and we see Bitcoin start to rally in that wave 5, and altcoins, you know, continue their corrective ranges, because we know a lot of those altcoins are in these corrective ranges where it's time wise, it does seem like it might take a little bit longer for these corrections to overall be done with before continuing the big impulses to the upside. So it would make sense that the altcoins continue to range here, range and correct a little bit while Bitcoin sees that wave 5 to the upside, the first wave 5 to the upside. I would not be surprised if that does happen, and that would allow dominance to kind of push up as well. Okay, let's see. Let's see, Diago, what did you say about a new all-time low? Your setup was right, made a new all-time low. As far as, I'm not sure which one you're talking about. Let's see here. Let me scroll up and see if I can't find which one you're talking about. Or are you talking about a range low? We did make that new range low. Yes. So do I think, and Lu Dong, do I think Sui has finished the fourth wave? It's possible. Time wise, it's looking pretty good now on Sui. And we are holding that 382, you can see. But the only thing that's bothering me with that is, I mean, we got so close to that 0.5 and to that point of control. So it's a tough one, man. And we're not back inside the value area yet. And until we're back inside that value area, we do have to say that it's going to be acting as resistance. Actually, let me zoom in here and we'll talk about what happened yesterday as well, because you can see we had barely front run that golden pocket. If we zoom in here, really zoom in, you can see that we did not touch the golden pocket. We had front run it just barely here. And so, and we're also below the value area low of our range. And as long as we're below that value area low, it's going to be acting as resistance. And we could even see that fake out to come up and hit the golden pocket, grab the liquidity from yesterday, and then dump back down and come to that 0.5. So do I think it's over yet? Honestly, I can't answer that question for you. I don't know. What we can do is we can look at a little channel, a descending channel. So let me hide this range real quick, and we'll just pull a little descending channel from our highs to our lower highs of that range, bring it down to our first low. Let me make this blue so it doesn't confuse you guys here. But you can see how well this channel is respected. Lows here, highs, highs here. Midline overall is being pretty respected here. We bounced from the midline on the reclaim earlier today. But if we do reject from the golden pocket in an hour or 2 hours, or you know, maybe 4 or 5 hours, it's going to be in alignment with the top of that channel. We reject that there, and then we dump, you know, it could be, and then honestly, we wouldn't even want to make it to the bottom of the channel. We would want to hold this POC and start to kind of reclaim and break out. So I'm not sure. Honestly, I'm not sure, and I'm not comfortable with saying we're gonna pump. Now, if you start to break this descending channel, this blue lower time frame blue descending channel, you'd also be breaking your golden pocket, and then you'd be really comfortably back within that volume profile. And once you're comfortably back within that volume profile, you could probably expect a rotation up to the value area high at least. And what I would be looking for in that case, especially going into the weekend, say, you know, we come up here, we break it, we come up to the value area high, I would look for a rejection from that value area high or from the liquidity grab of the second pivot of the channel. Because remember, anytime you break these channel corrective structures, you oftentimes will come up and grab the liquidity of the second pivot. But after grabbing that liquidity of the second pivot, seeing a fake out of that value area high, we could see a rotation back down to back test that channel and then see the real breakout. So there's a few things we could be watching there with that. And really, we're just going to have to keep an eye on the charts and see. You know, I would set an alert. You could put a alert right up on yesterday's highs because that's going to be a liquidity grab into a golden pocket. And anytime you have a liquidity grab into a golden pocket, that could be a good short. Okay. Did you take that PAL SFP from yesterday? So I did post about that, and I did take that trade. I let's actually look at that real quick because I talked about this in yesterday's stream, and it did play out pretty nicely, but we didn't make it down quite to our level that we wanted to make it down to. So my TP1 was going to be this 11.312, and then TP2 was down at the golden pocket and the POC. But I did take some profit yesterday. Where was it? I took profit down at the golden pocket between this low and the high, just because it wasn't. It was dumping, but it wasn't looking. This is a very low liquidity asset. I've noticed that. So you got to be careful with these. And I just wanted to take some profit and move my stop loss to break even. And it looked like we were bouncing from the golden pocket area. So, but yes, look at if we look at this, let me hide some of this stuff up in here. Let's zoom out onto the 4-hour chart. We talked about this in yesterday's stream, seeing a fake out of the value area high of the range to grab our internal highs into our monthly level. And our monthly was also that golden pocket. So we pierced that monthly. And then the second we lost that, the highs at 11 point or 14.323, that was the short signal. And then, we just kind of dropped. Now, I do still think we could roll over here, but money flow looks pretty good. It looks honestly pretty nice here on the 4-hour chart. We are seeing bear divs, but it's not looking the worst here. And that's another reason why I was looking at potentially getting out of this trade. We are seeing nice bear divs develop on the 1 hour, though. You can see higher highs, 1, 2, 3, 4, 5 higher highs, and then you have the 5 lower lows and the momentum waves overall. Money flow has crossed over into the red on the 1 hour chart, and we are below the value area high of the range. So as long as we're below that value area high, there is a potential that we do end up rolling over after hitting into our golden pocket and our monthly, and at least coming down to take out these range lows down here. Think of this as sort of an ascending channel structure as well. It's not the cleanest ascending channel, but you have your ascending channel here, which is often what you see towards the end of a bullish move. You start to get that exhaustion. You hit into some key resistance, and then if you do break that down, you'll oftentimes come sweep the liquidity of this entire channel structure. And then you'll either, if it's bullish, after sweeping that liquidity, you'll reclaim, you'll get back inside the volume profile, and you'll start to, work your way back up there. But if it's really going to roll over and we break this down, we don't grab this liquidity, or we grab the liquidity and then reject from the value area low, then you're going to continue dumping here. So you can pull a volume profile of just this little channel range, this ascending channel range here. And yeah, I would say, all right, so what we could be looking for, we're below the value area high, and we're above the value. Okay, this is going to get confusing. We're below the value area high of our big range, which is right here. We're above the value area high of our micro range. This is just a micro range here. So it's a bit, we're squeezing together here, and we're going to have a choice. We're either going to break above that value area high and continue pushing up, or we're going to break that low range value area high back down and then really start to roll over and come down. And I would say, we would probably come down to sweep all that liquidity, or at least the liquidity that is resting right below the value area low. For me, I would say it's tough because our 4-hour, let's look at our 8-hour here. Let's look at our 8-hour chart. Yeah, money flow is looking pretty good on the 8-hour, pretty green here. We do have slight bear divs. Nami's money flow is starting to roll over, and it's a bit quicker here. Let's check out our daily time frame. In daily time frame, the money flow is still curving to the upside here. So yeah, I think that we could break up here. The momentum wave is starting to top out. And I will say this, sometimes you see that one last little rejection. So if we go back to the hour, we hit into our golden pocket or monthly. Sometimes you see that one last little rejection. Grab your liquidity of our little ascending channel range, and then you start to break up. So overall, I would say more upside is probable based off the daily money flow, but that doesn't mean we can't see that small rejection down to 11.3, grab that liquidity before making, similar to what Bitcoin just did. Very similar to what Bitcoin just did. And so, yeah, I would say it's at a decision point right now. Let's check out the 12 minute and 15 minute here. Ooh, yeah, money flows crossing over back into the red. Hidden bear div just did print on NAMI, coming to backtest that value area high of our larger range. So that is kind of a bad sign for me. And or you know what, even we could just continue ranging in this range knowing we're going into the weekend and then make that bigger decision come Monday when markets open. But we are getting our rejection from the monthly and from the golden pocket. And so that is, as long as you shorted that or you shorted the SFP at 14.3, stop is going to be above those highs. And I would stay in the short. If you're in the short, like why get out of that short trade? Okay, so that is it for PAL. Next, let's see here. ETH taking dominance and pumping into a previous all-time high. Okay. Yeah, guys, if you do get anything out of this video today, please like and subscribe to the channel. That just helps me grow a little bit. Also, just really briefly here, I want to talk about some of the partners of the channel. We do have BYDFI. They are a KYC free exchange and a VPN free exchange. All you need is an email and a password to sign up. They are doing a really good deposit bonus right now. If you deposit $100, just $100, you can get a 50% deposit bonus on your deposit. And then depending on how much you deposit, you can get various 10 to 20% deposit bonuses on your deposits. You do get a minimum of 17% discounts on trading fees, but you can get higher discounts on trading fees depending on how much you deposit. There's different tiers that they have there. And also, I partnered with them to create a Telegram group. They post in the Telegram group some trade signals, I guess you could say, and I post some of my trade setups in there. We also post some of the news, like that news on Bitcoin and Galaxy Digital. We posted in there. So if you want to get access to that Telegram group, all you need to do is sign up with my affiliate link, and then you need to deposit $100. And that's your money to trade with. We're not taking it from you. It's still yours. You'll get a 50% deposit bonus. And then once you do that, you can click on the link in my description, go into the Telegram, and in order to verify yourself, you just type in /verify and then your user ID, and it will automatically put you into that Telegram group so you guys can see some of the trade setups I'm posting. Yesterday, right as soon as the stream ended, I posted that Solana short from 189 down to 175.6. And that did play out pretty well there. So, yeah, BYDFI is one of them. We do have NAMI. NAMI is this momentum and money flow indicator. It does help me with my entries and exit confirmations on trades. They're doing a 50% off special, and I do not know how much longer that's going to be running. So if you're interested in purchasing NAMI, if you use my affiliate link and the discount code in my description, which is Divine50, you can get 50% off NAMI. We have MEXC, and MEXC is offering a 20% deposit on your bonus. If you deposit $100, you'll get $20 free deposit bonus, and you can earn up to $300 in futures futures trading, depending on how much you trade there, volume you trade. And then lastly, we have Bybit. Bybit is one of the biggest and most reputable derivative exchanges in the world, and they're offering up to $30,000 depending on how much you trade and how much you deposit there. So all those links are in the description, and we can get back to the TA here. And thank you guys for everything. Thank you for hitting the like button. Thank you for being here. We are growing, and we are finding the trades here during the streams. Okay, what's up, Quiles? Good to see you, man. Yeah, potential short on BTC. Watch MEXC value area low. Well, I tend to follow the Coinbase chart. To me, I backtested this chart for many years, and I do think Coinbase has the most important volume levels, followed closely by Bybit, but I do think those are the two main volume profiles to be watching, and so that's what I watch. We are right now above the value area low. And it looks like we are not seeing that liquidity grab. Good sign. If you are a bull, this is a good sign here. If you want to see us pump, we are not really getting that liquidity grab of those internal highs from earlier today. So very nice. Let's watch up towards, because you can see in here, there's not a lot of structure in this area here. So quick move up, quick move down means we could see a quick move up through this, coming up to our next resistance area, being that point of control, golden pocket, and pitchfork midline. I would really say between 118K and like 118.3K. Money flow looks really good here on Market Cipher B. Even on NAMI, it looks pretty good. And we did print that hidden bull div earlier today. If we look at the 15-minute chart, okay, no bear divs yet, but it's getting close. So you can see lower highs here, just barely. If we roll over now, we could see those 15-minute bear divs confirmed, but they are not confirmed yet. I think we are going to see a little bit of a move up here, guys, just personally. And that 118.3 is going to be where I'm watching for a potential reversal. Okay, I'll be back later. Awesome. Thank you, Deadcat, for joining in, man. Yes, and I'm watch whenever you have the time, you know. What's my thoughts on ETH taking dominance and pumping into the previous all-time high? Well, I do think overall, I've been talking about this. I do think Ethereum does have a high potential of pumping up to 45.35 and then even much higher if we go zoom out onto the daily chart. I don't think this wave 3 impulse is quite done yet. You know, we could be still in this coming up to that 1.618, rejecting from that area, seeing a bit of a month or so correction before continuing in the wave 5 and finishing this overall impulse to the upside here. So I do think ETH is going to come up and take its all-time highs out eventually here. It just might not be like right away. Let's see. Is the all-time high on Ethereum that? Let's throw that on the chart here. Yeah, I do think we'll take the all-time high out. It's just a matter of time. We are above the value area high of our 4-year long range. I've already had this range actually on the charts. If we just come in here, it's our 4-year long range. We're above the value area high. So let's zoom in onto the 2-day chart and let's talk about this as far as ETH on larger time frames. And let me hide that small range that's there. You can see that Ethereum has worked its way up. Really, our cycle highs from like 2024, we're almost up to those cycle highs. And I think it's very high likelihood that we at least grab those cycle highs there, creating almost like a quadruple top in here. But this impulse has a high probability for me to continue pushing up. We're not seeing bear divs on the 2-day chart. 2-day money flow is looking pretty healthy still. It is starting to round out, which is a bit concerning. And on NAMI, it's already coming to the downside. But if we look on the weekly chart, weekly money flow is just crossing over into the green here on Market Cipher B. And if this crosses over into the green, we still have some time left on our momentum wave. On NAMI, weekly money flow is in the green and it's pushing up very nicely here. So overall, I do expect more upside. But I've talked about this many times, guys. Within or around these bands, we often see consolidation happen. It's not that unusual to see. And so for us to see a little bit of consolidation, and what's really important right now is we're consolidating above the band, really. You can see above and around the band. And the value area high of our 4-year range is in perfect confluence with the back test of that lower part of the band. So if we're going to range in here, just range like doing something like this for the next couple of weeks, and then we could see that break up to continue the wave 3. This could be an internal correction within your wave 3, because within your bigger wave 3, you're going to see a 5-wave impulse within itself. And so I do think that it's very, very possible that we do continue up here. The key for me, the key support that we really don't want to lose. Obviously, we're breaking out of a 4-year range. That's the value area high here for your 4-year long range at about 36.25. And you can also see the bottom of our pitchfork band, of our key pitchfork, is in this exact area of support. So I would even welcome a breakdown to this area, grab the liquidity of these 2 lows that are right here of this little range, even coming down to hit that level of support. And if we're seeing bull divs coming down into that area, you bet I'm going to long the crap out of that thing and look to bring it up to 45.34 and then potentially even up to new all-time highs here. So I would honestly welcome a pullback here on Ethereum, but we might not get that, guys. We might not get that. It might just be holding this upper band overall. You can see it was acting as resistance here, and now it's acting as support, or we're chopping around it, and we're trying to reclaim it today. Let's zoom in on the hourly chart. Yeah, we're trying to reclaim it right now as we speak. So if we can reclaim the VWAP right here and that upper band, then we might break this area of resistance that has rejected us the last 2 days. Really, we're starting to consolidate in a triangle here, and I don't like that because triangles are generally continuation patterns. And so if we just pull like a triangle like this, we're starting to consolidate here within this guy, and you kind of dumped coming into it, so you do have a higher probability to dump coming out of it. A, B, C, D, and then E maybe, and break this sucker down. Grab, or at least break it down to grab the lows and then push back up. I'm really not trading Ethereum too much right now because we're just in this upper range, and it's very dangerous to long after such an aggressive pump. I would be interested in longing, like I said, around that 38.25 34.25 to 34.10 area. But until we get down there, I'm not really interested in looking for longs. And for shorts, we had our opportunity for the short yesterday and earlier today as well. Like that's our resistance. That's the point of control of our range. If we turn on that mini range there on Ethereum, you can see that's our range. Now our point of control has shifted down. Was that? Hold on. I think that was our point of control yesterday, or was that the value area high? No, it was our value area high in confluence with our golden pocket. So we did reject that value area high golden pocket area, and we're still just trading within the volume profile. You can see every time we come up to that value area high, we're just rejecting it. And as of now, we're chopping around the point of control, which is considered fair value. But if we lose this, there's not much keeping us from coming down to that value area low, or even grabbing the liquidity of the range lows. And I would really like to see that liquidity grab like we got on Bitcoin just yesterday. We finally came down and grabbed the lows of the range, took that liquidity, and now we're starting to reverse. So does Ethereum continue this correction a little bit longer, break down, bounce, maybe do something like this before continuing? That would be ideal situation for me, but you don't always get what you want. So let's just keep an eye out on Ethereum. It's consolidating here, it's squeezing, and generally we do see a bigger move out of these squeezes, and this could squeeze for a few more, like a day or two more. Let's see, Saturday, we could squeeze all the way pretty much through Saturday, and then see that move on Sunday like we generally do. But yeah, I do think Ethereum, J Wheels, I do think Ethereum has a higher chance of pumping on more macro levels. Ethereum has a higher chance of pumping up to, that 45.34, and then potentially up to new all-time highs. Okay, I got lost in the chat here. Man, what's up, dude? It's good to see you in here. Cut juice from 120K to 117.3K to 119.4, then 1.618. Hot hit. Now we could expect the 0.5 fib to hold at 117K. Let's see here. We're at 117K right now. Are you talking about the 0.5 fib from this guy? I mean, yeah, around there. I think that's what you think there. So you want that to reject us and then continue. I'm not sure exactly. Vision, welcome in. Thank you, man. Thank you for the fire emoji. Cycle is over for short term. I am Vic. I don't try to predict whether the cycle is over or the cycle's not over. We're traders, so we map out trades, and we do the trades. But I will say this: let's zoom out onto the weekly chart first. Let me go onto my higher time frame chart, and I want to zoom out to the weekly. And I talked about this with Jason Casper earlier today in his Discord. I am a little bit concerned about, and we're actually going to cover. Let me turn off those rays real quick. We're actually going to cover this Pitchfork midline here because, guys, we talked about flipping this Pitchfork midline to support continuing higher. This on the weekly time frame from our 74K highs to our 108 and 112K highs, then up to our 123K highs. We are seeing a triple higher highs in the price action, and our momentum waves are now in our weekly. Look at our weekly is starting to top out and roll over here. And so we are seeing weekly triple drive of bear div. But also our money flow at 74K, it was topped out. We got a very slight lower high here, and then, or like an equal high, I would say. And then we got that lower high again. So we are starting to see momentum and money flow bear divs on the weekly. Now, anytime, if you guys have been around in past cycles, this does eventually end up playing out, and it does eventually end up dumping into a bear market. But I don't think we're done yet. Like I said, if we turn back those rays on, I think we're going to end the bear market in some sort of like rising wedge type structure, and we could make it all the way up to 140K. I'm looking at 145K to about 150K. But it just, not even looking at patterns, not even looking at the bear divs. Let's just look at our pitchfork that has guided us. So this pitchfork here, let's zoom in onto the 2-day chart so we can get a better look at this. So from the lows of the bull market, the lows of the bull market, the lows of the bear market, that's our lows. You can see how well this pitchfork has been respected on higher time frames. Every major pitchfork level has given us high time frame resistances, and then flipped into supports, resistance here, flipped into support here, broke above it, maintained above it for a couple months during that prior all-time high range. Once we broke it down, back tested it, rejected, saw a 10K rejection. But now what is super important is we're flipping that midline that rejected us. And this is such a good sign for me that we broke above it with a volume imbalance candle to the upside. So you can see this break above it, broke above it with a nice volume imbalance candle here. And overall, we're now maintaining as support. And with yesterday's drop, we finally came down to hit it and backtest it. And you can see here, yes, there was a wick past it, but still no daily candle closed below it. And if we zoom in even to the daily candle, no daily candle closed below it. This is a high time frame support resistance structure here. So yes, you will see wicks below it and stuff like that. But as long as you're not seeing real candle closes below it, then I do think this could continue to hold. And it acted as resistance, and we did see one candle close above it, but the very next day we lost it. Here we've been above it for weeks now. And what we often see on these higher time frame flips from resistance to support is you will form a range. You will come down, back test it. You will even chop around, ranging in here. And then if the market is going to be good to us, it will continue pumping here. And I do think that's the highest likelihood for Bitcoin. As far as our impulse from 98.2K, we have our double 1-2, our 1-2, 1-2. We did our third wave, and it hit directly into the 1.618 Fibonacci extinction target. So we wanted to see a 4 to correct us down to hit that pitchfork. Then we should be looking for a 5, 4, 5 to end this impulse here. And this impulse is only one leg of a much bigger impulse that we could be seeing here. So I do think the bull market is going to end with a nice big impulse. And potentially, we could come up to 136K. And let's go ahead and talk about some of the higher time frames. So what's really important for me is we're flipping above this midline, this pitchfork midline, and we're holding it as support. As long as we don't start closing daily candles below it, I think we're pretty safe to say higher's probable. If we do start closing daily candles below it, then yeah, guess what, you guys, we might be in some real trouble. We might see a big flush, even coming down to take out 98.2. We might see this thing kind of being a failed thing and then break all the way down to grab that liquidity and form a bigger range in this general area. Because now I'll go to my Coinbase chart and we will discuss so you can see we hit into the top of the upper band. Let me hide some of this crap that's in here. Just get rid of it. We hit into the top of the upper band of the pitchfork, which was also that 1.618, exactly like I just described in the last chart. We have our double 1-2 impulse. So our 1-2, 1-2, our big third wave is projected to bring us right to that 1.618. Well, we rejected pretty much to the exact dollar from that 1.618 and the top of the pitchfork band. Now we chopped around, we were chopping around, this midline was holding for a couple weeks, but now we're dropping below it. And if today closes below it, that is going to be a bad sign that we might move down to 112K. But we are still, in this impulse has not been invalidated yet. This double 1-2 impulse will not be invalidated. And actually, if we look at this, let's zoom in onto the 2-hour chart and get rid of that. And let's pull our Fibonacci from our lows of wave 3 to our highs of wave 3. And if we turn on that golden pocket, hitting this golden pocket at 112, 113.2 to 112.8, just rounding those numbers, that would be the invalidation for the impulse. If we hit this, that impulse is invalidated because your wave 4 is not allowed to hit your golden pocket. Your wave 4 retrace is not allowed to hit your golden pocket from your wave 3 move up. So if that gets hit, yes, we could bounce from there, but I would just expect lower to come. And that would invalidate the overall impulse to the upside. And in that case, we would have to relook at this as possibly a 3-wave corrective move, some sort of 3-wave corrective move, hitting in what you would call an expanded correction, because an expanded correction can sometimes go to the 1.618. And then now we're about to dump, possibly even coming to take out your lows of that corrective move. That's generally what happens on an expanded correction. So that would be a case for a bigger dump. Now I want to cover one more pitchfork. So this is our Coinbase pitchfork that is pulled from the lows of your 2024 range. You know, that the lows of your 2024 range down here. Very important shift in market structure, completing the last impulse up in that weekly impulse. And now if we look at our larger chart, looking at this cycle from our weekly impulse lows of wave 3 to the highs to the lows of wave 4, that 2024 corrective range in here, you can see we're also at the top. You know, this pitchfork has guided me. I've had this pitchfork on my charts for over a year now. We pulled this pitchfork right after creating this low. I took profits at 108K because we were hitting into the top of the pitchfork. Go watch my videos back in November if you don't believe me. And we looked at this rejection up here, and you see we worked our way down. We were holding, let me zoom in onto the daily so you guys can get a better look at this. We were holding this band of support for months during that all-time high range. And once we lost it, back tested it, dropped, back tested the midline. I've talked about this little guy here. That was the Trump tweet. It was a weekend and it dumped right afterwards. So that's a little bit of an anomaly. But once you lost the midline, you back tested a couple times. You couldn't maintain, you couldn't flip back above it. So what do? You drop to the next major pitchfork support. Once we got there, 74K, we impulsed up. And once we impulsed up through it, we never back tested the midline. So guess what? After rejecting from the upper band, we had to go test that midline. We tested it at 98.2. Now this is the start of our current impulse that we're in right now that is potentially not completed. So I do expect this impulse to complete in here. It's the highest probability, I will say, for this impulse to complete. But it is a bad sign that we are rejecting this upper band again. And last time before we came and hit the top of the upper band, if you guys go watch my streams from a couple weeks ago, I guess it would be from in this general area. So about July 10th or July, you know, that week of July 10th or so, we hadn't, actually it was before that because it was before we even hit into the lower part of the band. But I talked about how the lower part of the band had already been hit into, so that there was a high probability that we would break through the lower part and we would push up to the upper part of the band. And that's exactly what happened. So we broke through the lower part, flipped it to support very, very locally. You can see here, broke through it, flipped it to support locally, and pushed up on our last leg to the top of the band here. And on higher time frames, that was just a wick above the band, you know, on the daily and higher. But now we're starting to lose the band, and these ranges that often form in bands, we're starting to lose it now. And another key thing is we were talking about that POC at about 118K. So if we pull this volume profile of this range and we look at that 118.3, so I guess it's a little bit higher on this guy. So let's pull it. Let's actually do a full. Okay. I don't like that golden pocket. Now that golden pocket's also going to be a very nice resistance as well. And we'll talk about why. If we zoom out to the daily and let's just mark that daily level of resistance, our last naked daily up there, not naked daily POC, just a naked daily level. You can see that our golden pocket pulled from the range highs to our new range lows. Daily golden pocket right there. That's a resistance at 120K that I would be paying attention to. But once again, if we do get up there, we'd be breaking back into the volume profile. We would have kind of flipped, breaking back inside the pitchfork. You know, maybe by then we'd be over here more. So like this, you know, kind of ranging a bit, break it up, and then your value area high is going to be in alignment with that pitchfork. By the time you're either going to reject from that and then continue to work your way down, or you're going to get back above it, hit into this golden pocket in daily, drop a bit, try to flip this, and then continue. But we could see a hit into this, a loss of this, and then that move back down. So there's a lot of scenarios, guys. I know I'm just saying what ifs, and I know you guys are saying who cares about the what ifs, but as traders, we just look at possible market scenarios. You got to get a psychology for the way the market works, and you map out the levels, and then you develop these certain scenarios that can happen, so that when you're ready, if it does happen, you're ready for it. So now we know that this is a resistance on our charts that we do need to be paying attention to, is that daily and that golden pocket area. If we do come up there, we will be breaking our value area high. Now, by the time we work our way up there, the value area high could shift again. We could have had more time in this range, and your value area high could shift to match this. So we'll have to pay attention to how our value area shifts. You know, our value area low just shifted a little bit lower the last few days, and we'll pay attention to all those things that are happening here. But it's just being prepared for the different scenarios. And if you're prepared for those, and if you map out the levels of interest, you wait for the market to come to you. If it comes to you and you have your confirmations to enter the trade, you enter. But we're not just entering willy-nilly without plans, because if you don't have a plan, that means you don't have a calculated stop loss. If you don't have a calculated stop loss, your risk management is not there, and you're gambling. You're not trading. So you really want to get in the mindset of a trader rather than a gambler if you want to be long-term successful here. How are there only 64 watchers? Oh, 64, that's pretty good, man. I mean, thank you guys for joining. I appreciate all of you guys coming in here. And yeah, you know what? We'll grow in time. The algorithm is not very kind to me. I know I'm not near as entertaining as some of the other guys out there. So, but welcome in everybody that is here, and thank you. And please, if you get anything out of this video, please do hit the like button so that I can get my videos out there more, and we can get some more people in the chat and look at some more coins. Just build a community here. What's up, investment time? Much love to you as well, dude. You started posting videos on my I started posting videos on my channel, Silver Knight. It looks like you have a channel. I posted a video where BTC might bottom at 113.3. Ridiculous amount of confluence there. Okay. What's up, Darren Does Things? Welcome in, man. It's good to see you. Is it possible to get rid of the black area below the NAMI indicator? You know, oh, it is possible. Thank you, Mark Dutch. Yes, I have no idea what that was, but thank you for that. I didn't even notice stuff like that. R Pink, what is up, man? Welcome in. R Pink's another mod of the community. Been with him for a long time, riding in the Casper crew. So, according to you, which indicator is better, NEMA or MC? I'm sure you mean NAMI or Market Cipher B. To me, I think they both have their own perks. They both are really good. And now that I have both of them, I kind of like using both of them together, because these hidden signals on NAMI are so good, the hidden bear and hidden bull div signals. But even though Market Cipher B's money flow is not based off of real technical money flow, it works. It is the best money flow indicator I've ever had by far. And for me, that's the gold mine right there. And NAMI does have good div signals for the most part. So together they work great. Just press buy and sell. Yeah, you know what, Mark? I know that you can just press buy and sell in the random middle of nowhere. And if you have proper risk management, you can overall at least like kind of break even or be somewhat successful. And I know you're joking about that, by the way. I know you're joking about that, but I'm just trying to make a point about risk management is probably the most key thing in all the markets. Honestly, guys, anyone listening here, if you get one thing out of my channel, the thing I want to harp to you the most about is risk management is really key. If you want to be long-term successful in this game, you are going to have to use risk management. And what you have, say you have a $1,000 account or a $10,000 portfolio account, your trading account, and you're risking 1% per trade. At first, your profits are going to be like this, slow and weak, and you're going to be putting in a lot of time and effort just to make very little profit. But Einstein did say compound interest is the eighth wonder of the world, and he was right with that. And as you grow that account slowly and steadily over time and recompound that back into the portfolio, there will get that point where you start to hit that exponential growth curve part of it. And that is when you can start making a living off of your trading profits. But if you're not risking the proper amount, you could go like this. You could make a big win, and then you're maybe in those small win, small win, small win, and then you have that big liquidation, and then you work it back up for months and months, and then another big liquidation, and then before you know it, you wreck your account and everything. And I had to learn this the hard way. I really did have to learn this the hard way. We often say it's the market's tuition for us learning how to trade and for us getting out of our stubborn heads thinking that we can win, because no trader wins every trade in the world. No trader wins even usually 80% of the time. I know there are traders that are that good, but it's all about risk management, guys. It's about risking 1 to 2% per trade, and you're calculating your trades ahead of time. That's why it's like, okay, if you're going to short this area, you're going to short this area here, your stop is probably going to go above those technical lower highs there, and you're going to be targeting the value area low of the range. First of all, you want to make sure your risk reward ratio is asymmetric. That means a better reward than risk. So for me, it's about at least a 2.5 to 1 risk reward ratio, preferably a 3 to 1 risk reward ratio. So you're making, for every $1 you risk, you're making $3, right? Now, based off of that, you have to look at this percentage here. This is your stop loss percentage. And whatever your account size is, let's just take $1,000 because it's easy. Say you have a $1,000 account. 1% of $1,000 is $10. So you're going to be risking $10 per trade, at least until your account grows or loses money, because that 1% is going to change with every trade. But you're going to take 1% and then you're going to divide it by 0.87%. But you're dividing it by 0.0087 because that's a percentage. So you know that when you're doing that. So like, let me just bring this up here. If you have $1,000 account, that means you're risking $10 per trade, right? And so you're going to do $10 divided by 0.0087. You can put $1,149 on the trade, on this trade here. And if you get stopped out, you'll only lose $10. That is how you calculate risk management. Now that 1% is going to trade every single time, because if you win it, now you're going to have $200 or whatever. You can put that back in there. Now you're going to have to recalculate what 1% of your new portfolio size is. But the key thing to learn in trading is using this number. Now, if you're randomly and arbitrarily taking long and short positions without plans ahead of time, then you can't calculate your risk. If you can't calculate your risk, you're using poor risk management or no risk management. Over time, it's a recipe for disaster. So I would say this is the reason why we look at all these scenarios. We map out the key levels ahead of time, and then we make our plans ahead of time. And if it comes up there, say, Bitcoin's coming up there, pumping, we're working our way up there, and it comes up here, I'm not just going to randomly limit short here. I want to see bear divs on the chart. As we're doing that, I want to see some bear divs on the chart in order for me to enter that. And if I do, I will look for entries. It's learning different skill sets. First of all, it's learning about risk management. Then it's learning how to your entry and exit confirmations. Now, for me, I use Market Cipher B and NAMI. Some people use market structure. I also use market structure sometimes too. Some people use RSI or other, whatever they use. They use other things, other indicators. But the point is to develop a system that works for you. It will take time. There is a learning curve. But if you want to be ultimately successful in trading, you do need to get these things down, and you do need to stick to the discipline of risk management and mapping out your stuff ahead of time. So that's my rant here for today. Let's see. I have Market Cipher. Sometimes I check it. Mainly use trade. Oh, yeah. Traders Reality does have. Are you talking about the vector candles, Mark Dutch? I am familiar with them. I don't use them too much, but we do know that imbalances often get filled in the market. So those vector candles are pretty much imbalances, and they are a good thing to look at. Kind of like a fair value gap or a single print, something like that. Uh, yeah. Oh gosh. Okay. I saw a funny comment there. Testosterone and what, any treadmill. Yeah. Okay, I'm behind in the chat a little bit. Let's see. That's the best highest win rate. Yeah, okay. So Bojergrum, I'm sorry I butcher your name so much, but Mark Dutch says this guy Borgum made some excellent free indicators. You guys maybe can check his indicators out. I'm not familiar with them, but yeah, it looks like he provided the script there. So thank you for that, Mark. Where can you enter long on BTC? Well, you're at your local resistance right now, and we're either going to reject this value area low and continue to work our way down, or I would definitely not be entering long right now. You kind of missed the liquidity grab. Your long was the liquidity grab of these range lows here and then getting above that, or even earlier today, say you missed that because it was kind of late last night. You could have looked for, after making the lows here, you could have pulled your fib from the low to your local high and then enter in that golden pocket 786 area. But we did hit the 886. So, guys, I did talk about this earlier. We hit the 886 of this current move down from the all time highs. We've been moving down. And now that we've hit this 886, we did bounce from the 886. You can see that there. We bounced from the 886, but that does give us a higher probability of coming out to take out our local lows from yesterday. So just be aware of that. Not a guaranteed probability, a higher probability. For me, my next major long I'm looking at is really around that 112K. Yes, there is some levels before that. Look at this fair value gap right in here. Not fair value gap, order block. We have an 2 hour order block right here that looks pretty nice. You could look at that area about 113K. And then like we can look at a couple things here. We'll look at some of the levels, but let me cover the chat here. Do you still think XRP will grab the liquidity above before heading lower? XRP. I think XRP is not done with its correction yet. You know, we have our corrective move down. I do think that we need either this, we're looking at it from this as a 5 wave 1, 2, 3, 4, 5. So we had our 5 wave move down. Now we're expecting a bigger 3 wave corrective move up to our golden pocket area before expecting another 5 wave impulse down because we need more time for this correction. This correction so far has not lasted long enough. What I will say overall is the 382 is holding, and that 38 between the 382 and the 0.5 is your 4th wave targets to bounce up for another 5th wave to another new all-time high. And you can see that 382 is holding very nicely. But we do have a daily right below that I like right down there. And even like around these lows here, you can see these internal lows into your 0.5 would even be nice. But like what I'm expecting now is you can pull a golden pocket here. And that general high around 339 is going to be, if you pull a range just of this upper profile here, the value area low of your upper range is going to be your golden pocket of your entire move down. And if we're looking for a bigger 3 wave corrective move up in your A, B, C, then this area here is going to be your rejection area. So I do think we're still consolidating. Let's see. Do you still think the liquidity grab above before heading lower? So I'm not sure which liquidity grab you're talking about, like of the all-time highs. I don't think we're going to make the all-time highs, but I do think we can grab the liquidity at least of this little guy in here at 326. I think we could make it up to this golden pocket around 339. But I don't think the overall correction is over. I mean, if you wanted to look at this a little bit differently, this high is higher than this high. You could be looking at this as a 3 wave corrective move down, a 1, 2, but your 2 came up to the like pretty much past the 0.9. So that's very, very, very rare for a wave 2. If this is all your 3rd wave, then you could be looking for a 4th wave push up before another 5th wave down, and that could be your bigger 5 wave. But I just don't like that count because your wave 2 came so high, pretty much a double top there. And also your 4th wave, now looks like you could be starting to form a triangle here in a 4th wave. Something like, you know, this would be in the making for your 4th wave and kind of chop around in here for a bit, very similar to what I think it was Ethereum is doing right now, and then push up in your 4th, and then you see a 5th. But once again, I don't like that count. I don't like that count at all. I think we are going to see a bigger potential move up to the golden pocket before moving down. And we need, so zooming out again on XRP, we hit the 0.382 at the bottom of the range. This was a very, very key moment for Ethereum or for XRP because this told us that the overall weekly trend on XRP is bullish, very bullish, right? So we had our huge weekly impulse up to new all-time highs. We had our multi-month correction down to the 0.382. Now that 0.382 will act as strong support in a strong trend. In this case, the strong trend was to the upside, so it will act as strong support. Well, we bounced from that 0.382, macro weekly 0.382. Because we bounced from that, automatically you should have the bias that we are going to break new all-time highs eventually. This could have been the start of an impulse. Well, guess what? We had our impulse in a wave one up to the top of the channel and to the value area high, our macro 7-month, 8-month long value area high. That's your range for the past 8-9 months here. Now we corrected after rejecting from the top of the channel and the value area high, we corrected to the value area low, but it was also our goal, our channel midline, which I don't know why our channel's all messed up now. Or wait, that was Sui? I'm sorry, I'm confusing it with Sui. Sui corrected to the channel midline, but we did correct to our golden pocket. If you pull a golden pocket from the lows to the highs here, and you look at that golden pocket, that is where we corrected to. So you bounce from your most common wave 2 area to bounce from. If this was the start of a brand new impulse, after finishing this impulse, we had a multi-month correction here. This multi-month correction. After your multi-month correction ended, you have your wave 1 here, your wave 2 here, and if this was going to be a wave 3, you expect it to bust up to the 1.618. Well, we marked this level out ahead of time. I showed you guys about a week ahead of time before coming up here. We pumped up right to that 1.618. We rejected right from that 1.618. So far we're on track. We're on track for the impulse to be on. It's the highest probability. And then in your wave 4, you generally see a 3-wave corrective move down between the 0.382 and the 0.5. Okay, and we've already hit the 0.382. Could it be the end? Yes, because there is something called the rule of alternation or the guideline of alternation, where if your wave 2 is very long and corrective, which if we pull our ruler, we go from the highs of 2 to the lows of 2, that was a 41-day corrective move to the downside. So generally, your wave 4 is as long or longer than your wave 2 is. Now, your wave 2, if your wave 2 is long, your wave 4 will be short, and that's called the rule of alternation. Or if your wave 2 is very short, your wave 4 will be very long. So we don't know for sure, but we have hit the minimum target for the 4th wave. So technically we could bounce here and start to make our wave 5 of our bigger 1, 2, 3, 4, 5, completing your 5-wave impulse. Do I think it's the highest probability? No, I don't. I think that the correction is going to continue a little bit longer. So that's why I think we could get a move up to that 339 golden pocket and then see a bigger move down. And we would even want to see probably a complex correction in here, multiple series of 3-wave moves to make it last longer. And I think that's the highest probability for XRP because we do know XRP likes to pump like crazy, range for a bit, pump like crazy, range for a bit, dump like crazy, range for a bit, pump like crazy. You know, it's got this thing that happens. So I think that XRP could start to form a range in here for a bit and then start that pump. But what was the question on XRP? Yeah, do I think it's going to grab the liquidity above before heading lower? I do think it's going to grab internal liquidity, if that's what you mean. Yes. I think it could go up to 339 to answer your question. Don't fear Chad Sailor and Metaplanet G Top. Yeah, right. But you know what? The thing is, when Sailor starts buying at the top, every time he starts buying at the top, we generally do see these corrective moves, like shortly after. Okay, wait. You take your current pitchfork from COVID lows, switch it to modified, and turn on the 0.125 level. The previous 2 tops have been perfectly marked by that pitchfork. Okay, let's check that out. Let's go on to the 2-day chart and let's go to, I'm assuming you mean this one with the COVID. Let's actually just zoom out to the weekly for a second. Let's take this modified skiff and turn on that 0.125. Is that what you said? 125? All right, let's do this 0.125. You're talking about this one from the COVID lows of 2020? Not sure what you're talking about there. You might have to post a chart for me. Actually, let me just do this. On that one, Cajuice. But I am interested to know what you're talking about there. Mark, if Divine Hood is okay with it, I'm happy for you to shill. Yeah, you guys can throw free indicators in here. Darren does things. I'm okay. I'm pretty lax with all that stuff, you know. I still have to check your indicators, Darren. Can't wait till I finish renovations and go back. Yeah, cool. Mark, sounds like you're renovating the house. That's really awesome, man. Analyze dot. Yeah, we can look at dot here. You know, a few weeks ago, I did say dot has the highest probability to come down to make new lows, and we did that but we are seeing now weekly triple drive of bull divs on the chart. Earlier, the last time I covered dot, let's go on to the daily chart. We were in this area here, and we'd hit the 886, and we'd bounced from the 886, but we had not come grabbed our lows yet. Actually, yeah, I think, yeah, it was these all-time lows. We had not come grabbed them yet. So I said one more low into our naked daily point of control on our daily level. Actually, that daily level was made afterwards. But that one more low would have given us those drives because where was it? We had hit an 886. We had saw a small bounce, and then a couple days later, we came down and actually took out that low. But we finally took out that low, and oh, I think it was in here because I don't think we had broken the pitchfork down yet. I'm getting confused on when it was, but anyways, so speaking of dot, let me clean this chart up a little bit here. And look we pumped right to our resistance box that we marked out. We marked that resistance box way back here in July 15th, around July 15th. If I just take this and I pull it more, oops. Yeah, hit into our resistance box. Dang it, I keep moving stuff. This was a resistance box as well. It was an internal high into your POC, and we did get a small rejection from there. That would have been good for at least a scalp trade. But then we broke above it and broke up to our next major level. But speaking of our dot is pretty much bottomed out, and we do have a weekly triple drive of bull divs. Now, this impulse is very similar to all the impulses we're seeing, but I don't know. Okay, you got your one. This is a 2. That's a flat correction in there. So that's your 2. That's your second one, second 2 here. So let's pull a golden pocket from the lows of wave 3 to the highs of wave 3. And have we hit that golden pocket? Oh, we've gotten so close. So we're very close to invalidating the impulse up on dot if it's going to be a double 1-2. You know, this being your wave 1, this being your wave 2 to here. And the reason why this is an A, B flat, C in here, that's your wave 2 was a flat correction. Then you have another 1 and then another 2 here. And then this is the start of your wave 3 here. This whole move up here is your wave 3. And now it does look like on lower time frames a 1, 2, 3, 4, 5. We'll have to look at that. It could be a 5-wave impulse down. And then if that's the case, we expect a retrace to a golden pocket before more downside. And then that would invalidate. But let's zoom out here. Let's start at the very beginning. Weekly time frame. So we do have a new weekly level we can mark out. We also have this now as a weekly, but I'm just going to mark this one here. That's our new weekly level at 339. And then as far as DOT goes, you can see we're starting to form an accumulation range, right? So we were up in here, we dumped very, very far down, and now our range has been really between like $7 and $3.50. That's been your range in here. And this looks messy as hell. Let me just clean this up a little bit more. but we have our pitchfork, our big pitchfork pulled from our last weekly highs to our weekly low, to our weekly highs. And we were chopping around the bottom of the pitchfork. You could see here. I know this is hard for you guys to see. Let me turn off some of these levels up in here so that we can see the chart a little bit better. That one's coming up, so I want to leave that one on. This one we busted through. I'm pretty sure. We'll just delete it and remark it if we need to. Anyways, yeah, so we had our pitchfork, we deviated the lows, we took out our lows. So finally creating those lower lows on the price action, higher lows on the momentum waves. On the daily time frame, we had on the weekly time frame, excuse me, we had bull divs here. We also had bull divs already between these two lows, but we wanted to come lower and create a new all-time low to get that third drive of bull divs on the weekly. We also wanted to see this money flow starting to bottom out here and starting to come up. Now it's bottoming out, but I wouldn't really say it's coming up just quite of yet. It's still flat at the bottom there. But overall, DOT does look like it's in a really good spot position to buy if you believe in the project. It is getting towards the bottom, and we're starting to kind of form this channel here where we could make one more drop down here. But, you know, if you get down into this area and we start to see another drive there, I mean, I would be buying the crap out of that thing spot and looking to pull it up at least, a little bit. So let's go on to the daily. We even have a smaller range. So let me go ahead and hide this bigger range, the weekly range. We'll hide the weekly range. And you can see right towards the bottom here is like our accumulation zone, our daily accumulation zone. I would say this little range here. So we're at the point of control of that range. That's also the point of control of our big weekly range. Same point of control pretty much. So you're at fair value. We did break up as far as the pitchfork goes. You can see this blue line right here is the pitchfork. Let me just make this a little bit bigger so you guys can see this. So we bounced from the bottom of our pitchfork. We worked our way up through the band, eventually ended up losing the band, back testing it, and then coming down. We lost the bottom of the pitchfork, but we were able to reclaim it, and we pumped up to the upper band. And we're finding rejecting from the top of the lower band of the pitchfork, so the upper part of the lower band. And now we are dumping back down. But this dump so far that we're seeing, that's a pretty big imbalance candle there to the downside, and that's very impulsive looking. So if we zoom in on this, let's go to the 2-hour chart. What I see from the top is a very nice 5-wave impulse down. You have your wave 1 here, your wave 2. You attempted to bounce from the value area high after getting above it. Then your big wave 3 down. Now your wave 3 is probably done now, and because you're starting to kind of try to change market structure. And we could see a wave 4 that brings you up to the 0.5 and before another wave 5 down. That could be your wave, your A and an ABC, a much bigger ABC to the downside. So let's pull our fib from the highs of 3 to the lows of 3. And let's turn on those wave 4 targets. So yeah, that 0.5 is looking pretty nice because it's above that internal high there. And like this is starting to get exhaustive looking, this like little crap in here. So if you do see a 3-wave move up, hit into that 0.5 and then get that one last leg down to finish this impulse down. From there, you would expect a little bit of a move up to a golden pocket and then a bit of a move down. But overall, like as far as DOT goes, you're at fair value. You're at the point of control of your range. And there's no real edge you have at the point of control. Unless the asset is super bullish, then people will be willing to buy at fair value. Your momentum wave is bottomed out, and your money flow does look like it's trying to come back up. NAMI's money flow looks pretty bad right now. It's coming out again still on the 8-hour. You are holding above that point of control. Today's daily close might be pretty important because if you can close above that point of control, you might be able to hold it after deviating twice below it, 2 days in a row, 2 wicks below. But I would say it is probably a high probability that you are going to continue down a little bit on DOT, even if you get a move up right now and then another move down. Overall, I would say watch out for these lows here. Like this could be a little range that you're looking at. Yeah, that's your kind of range that you're looking at. So even if you're zooming in on this, pull a range. That's your sideways range here. And your value area low, that's what you're holding right now. You're kind of at the value area low, reclaiming the point of control, trying to reclaim the point of control of both ranges. And I would watch at that value area high there. Let's just pull a Fibonacci from the highs of the move to the lows of the move. And let's turn on our golden pocket. Okay, yeah, that's definitely your resistance. Okay, so if you're going to move up now, you can see if this if this 5-wave impulse is done, which there is a count where it is done. You can see in here like a 1, 2, 3, 4, 5. It's done. Now that's your A wave there. You expect to move up in a B wave, and then you expect another 5-wave down in a C, creating your bigger ABC correction. That golden pocket pulled from the highs to your lows is coming in right at your pitchfork band, the lower part of the pitchfork band, and your value areas are right there. Value area high of your bigger value area, your daily accumulation range is right there, and your value area high of your small range is there. So I would say this box here could be a nice short area to look at, a potential short on Polkadot. But this, yeah, let's see. Money flow still looks pretty bad on the 2-hour. Are we seeing bull divs here? We did see 2-hour bull divs into your value area low, lower lows here, higher lows here. So yeah, 2-hour bull divs, but remember, a single drive of bull divs, if your money flow is bearish, that money flow is going to overpower a single drive. Let's go on to the 1-hour. Yeah, 1-hour actually looks pretty good here as far as a little bit of a move up. 3 lower lows, 3 higher lows, money flow curving to the upside here. Same with NAMI. You see bull div, bull div, bull div, money flow curving to the upside. I would say that it is likely that we could get a move up just based off the lower time frame bull divs, like hour, 2-hour. Let's see if there is 15-minute. Yeah, and even the 15-minute was showing some nice, look at all this. Higher lows here in the bull divs, lower lows here, and then your money flow is overall curving to the upside, just crossing into the green now. So, and money flow looks bullish on the 15-minute here. So I would expect a bit of a move up to this golden pocket area. $4.39, $4.37 in that general area. Now, this value area low, or value area high, excuse me, is of your small upper range. Oh, no, it's not. I'm sorry. That's of your bigger range. But that's a bigger daily accumulation range, right? That's your bigger daily accumulation range. So oftentimes on these bigger ranges, you will see a wick up a little bit past it. And knowing that we have our golden pocket and our pitchfork band right up past it, I would actually be looking at like taking this and looking at that guy there between 4.35 and 4.40. That could be the place where you do reject, because the bull divs we're seeing now suggest that we could get at least a little bit of a relief bounce, and then we could see that. So it looks okay, looks okay for a little bit of a move up. I don't know exactly what you're looking, Diago, on Carvela, I mean, on DOT, but and we have changed market structure bullishly on the daily time frame. We are impulsing up back inside our pitchfork, came up to the upper band, the lower band. Now we're rejecting from the lower band. So you could look at pulling your golden pocket from the lows of the impulse, if this impulse is done, which it looks like it could be, to the highs. And that 3.64 to 3.59, that looks pretty good. Actually, that looks like it is a support resistance flip also. Like in this general area, you can see it was acting as resistance, kind of support, maybe a little bit higher there. So that area would be a nice looking area to buy. I just want to check one thing real quick. 55%. Okay, that's good. And I'm not sure if you're looking at this on spot or just like kind of futures trading, but it doesn't, it's weekly triple drive of bull tips. The project does kind of seem dead, but you're near the lows. And if you're buying this, looking to hold it long term, I don't think it's such a bad area to be looking. Jesus Save 77. Thank you, man. That's a super nice comment. I appreciate that. Bitcoin third wave to 136K now. Yeah, I mean, 136K, I forgot to mention this, but if we go on to that more macro pitchfork here, we're at the upper band right now and we're chopping around the upper band, but the top of the pitchfork is coming in depending on how fast we get up there. It was about 136 to 145, depending on how quick we get up there. That's the top of it. And the top of it did reject us last time, and I do think the top of it could reject us again. Yeah, testosterone treadmill. That's what yep, exactly. Dang it, this chat is going so fast I can't keep up with it. And I've only got 60 people watching. What, what do I think about the South Park episode? I thought it was hilarious, man. And you know what? I'm not gonna get into my political leanings now. I'm not very political. Let's just say that I'm not very. I think the whole thing is crap. You know, it's a shit show. All of it is. But it was. I've watched South Park for years and years, and I just think they're so fun, so good at making fun of people. So I like that. You know. Michael M doing an amazing job. Can't wait to join the Telegram. Well, thank you, Michael. I do appreciate that. And if you join the Telegram, welcome in, man. Gamblers will focus on how much they can win. Traders focus on how much they can lose. Mark Dutch, that is such a good quote there. Guys, pay attention to that quote that Mark just posted. Gamblers will focus on how much they can win. Traders focus on how much they can lose, e.g., risk management. Peter, what's up, dude? It's good to see you, man. Yeah, please press the like button. I appreciate that, Peter. Seems like there are many opportunities for trades, right? Doesn't seem like there's many opportunities. Yeah, MJ25, we're in a corrective zone after a big impulse up over the last week or so, week or 2 weeks, and we are going into the weekend. So I do understand there's not a lot looking right now, but also be patient. A lot of what I see mistakes in trading is people try to overtrade. They have this psychology that they always need to be in a trade. And if you have that psychology, sometimes you'll make bad decisions just because you feel FOMO of not being in a trade. So wait for the market to come to you. Mark out your levels and wait. And if you're not in a trade, that's okay. You know, if you feel the need to always be in a trade and you make 4 or 5 bad trades out of 15 and you only make 5% for the week, but if you wait and throughout the whole week and you only get 1 or 2 trades, but you make 20% on those trades, those 1 or 2 trades are going to pay more than all those trades combined because you waited for the right opportunities. You waited for the market to come to you. So yes, trading is about patience as well and learning when to trade and when not to trade. Hey Divine Hood, thanks for the lives, man. Great stuff as usual. About risk management, how do you apply it when leverage trading? Do you calculate your risk, taking it into consideration? So if you're looking at trading, leverage really doesn't matter as far as your risk management goes. So let's go back to that example I just talked about. Say we're going to short that 120K area of support, right? This daily golden pocket area. And we're going to put our stop, we'll just create that same short trade, right? Like I'm just going to put it right on top of the daily. And then say our stop is going to go below those lower highs, like just give it a little bit of breathing room and above these lower highs, right? And so now my stop loss is 0.19%, and we're looking to take it down to value area low. So that's pretty much a 3-to-1 risk reward ratio. Now, say you have that $1,000 account. That means you're risking 10% per trade, right? Actually, I want to make this a little bit a better example. Let's put it below this high, even though that high is pretty much at the golden pocket. No, I don't want to do that. That's a bad example. I don't want to give you guys a bad example because we could come up, wick, hit that high, overall closing below the golden pocket and see the dump. So let's do this. Let's see the SFP of the golden pocket area. You put your stop, you enter your trade as soon as you lose that SFP. So at the 0.65 of the golden pocket, and then your stop is going to go above this high. A little bit of breathing room. So you now have a 0.74 risk. You're risking, that's your stop loss percentage is 0.74. So say you have that $1,000 account. So we know that 1% of $1,000 is $10. Let me pull up the calculator again. Calculator. Okay, so we're risking $10. So you're doing $10. That's your 1%. You're dividing it now. We're going to divide it by 0. It's going to be 0.0074 because remember, this is a percentage. So you got to move the decimal over 2 places. And so we're going to do the 10% divided by 0.0074 equals. So now we can put $1,351 on your trade. But hey, you only have $1,000 in your account. Well, this is where leverage comes into play. Because you don't have a $1,351 account, you only have $1,000. Well, now you could come in and you can bump your leverage up to 2x. Now that's going to give you $2,000 account, right? It's going to give you 1,000 of your own money and 1,000 the exchange is letting you borrow. So now you can throw this $1,351 on this short position. You'll still have what, 650 left to trade with in your account for in case you want to open another trade, but you're using leverage now because you need. So really leverage is only going to come into play if this stop loss percent is less than 1%. But some people like to do schlongs, as Jason coined the phrase, a schlong, a long and a short at the same time. So for me, I generally leave my leverage at 5x or 10x just so I have enough money in my account to use for multiple positions. I'm in like 6 or 7 positions right now. And so if you don't want to keep a lot of money on the exchange, which is a good practice not to keep a lot of money on the exchange, boost your leverage up to 10%, but your leverage should not matter. Your position size is what matters in a trade. Your position size should always be calculated by this number, 1% divided by this number. So if say I'm in 5 trades at the same time, say I shorted this, but I wanted to short this, but I got into the long on the SFP, right? So just let's do this 15.2 down here. I'm long on the SFP from 15.2, and my stop is going to go below the low. I have a 0.53% stop loss, okay? Now, let's just say it's still $1,000 to make the math easy, right? So we're going to do that calculator again, and we're going to do $10 divided by 0.0053. So I have $1,866 already tied up in a long position from here. And I'm not planning on taking profit. Maybe I took partial out up here, but say I'm not planning because I think this was the low and I think we're going to go up to 128K or whatever. You know, let's just say that's your plan, right? You're going to come up all the way up to new all-time highs. So let's just say we're going to break above the all-time high up to the top of the Pitchfork band. So you're going to stay in this long position at a 0.53% stop loss percentage. You can risk $1,886. I think it was $1,886. So now you have $1,886 tied up in this long position. But if you want to short this as a hedge at the same time, you need another 1,351. Well, now 1,886 plus 1,351, I don't know the math, but that's over $3,000. So now you're going to have to use 3x leverage just to be in both of these positions at the same time. So that's why you'll see people like me that just will crank the leverage up to 10x just so I know that I have enough money to do multiple trades. I have enough money to be in a Bitcoin short and long, maybe to be long on Solana, maybe to be short on Ethereum, you know, whatever. I'm going to have enough money in my account to do that, but your risk is not based off your leverage. Your risk is based off of this percentage. Your position size is based off of that. So that's where leverage comes into play. Leverage is not about, hey, I have $1,000 in my account and I'm going to crank it up to 10x and I'm going to throw $10,000 on this SFP so I can make more profit. That is gambling. You are not trading properly. And if you do that practice in the long run, it is probably going to, you know, one big mistake can ruin months and months of building a portfolio. So the leverage comes into play just based on having enough reserves left open to trade new trades, not about you know, cranking up the leverage so you can do more money than you should. I hope that helps, Israel. I hope that was a good enough explanation, but I can make a video about risk management as well. We can go into that more. Honestly, risk management is the #1 thing I recommend you guys really follow and learn. Okay. Hope everyone has an amazing weekend. Yeah, Brian, what's up, man? Welcome in, dude. B-dub. Thank you, man. I hope you have a good weekend too. Yeah, Mark, I'm worried about that too. The dot chart reveals what's going to happen to 99% of alts. I think the good layer ones will always be around, but I do think there's a lot of crap out there. And I do think that as the hype dies off for the project and the sentiment, we know that a lot of these coins are kind of gonna die off, and that's why, you know, Bitcoin, Ethereum, Solana, these guys are like the big dogs. Of course, a couple of the layer ones are like the oracles, like Chainlink and stuff like that. They're always gonna have some value, but a lot of these coins don't have the use case. Divine Hood, I'm going to DM you in Discord the link. Yes, Darren does things. Thank you, man. I appreciate that. And if let me check my Discord right now. Because sometimes you might have to send me a message request, but if you do, I will accept it. Let's see. I don't see anything yet. But yeah, if you want to, Darren, absolutely, man. I would appreciate that. Dot parachain auctions. I did the dot crypto SHA 256. I did the dot parachain auctions back in the day. I still have parallel finance. I still have like two or three of them, Stingray or Ray or whatever it was. I still have my dot parachains. And they're down like 95%. I'm definitely like in the red on those for sure. I kind of forgot about them. Yeah, BTC is breaking back up. And guys, we did grab the range liquidity and I did think we were going to get a little bit of a pump here. So we're going to be watching that 118 to 118.3K area. If we reject there, that's going to be kind of scary. But this general area of resistance here, I do think we're going to at least pump up to that area. That explanation helps a lot, man. Cool. I'm glad. I think I got it, but definitely a video dedicated. Yes, I will make a video. Yes, I will make a video, Israel, on that. Really, just know that no matter what you're doing with trading, you should always have a plan ahead of time. You know, if you're going to long the SFP, you know, obviously you're going to long upon the reclaim of the level, wherever that was, this level right here. You're going to long upon the reclaim, and then your stop is going to go below the low. So in this case, you have a 51% or 0.51%. So generally, you could risk about you could 2x leverage your whole portfolio, and if you get stopped out, you're only going to lose 1%. Now let's just say we sniped the crap out of this. We got into this low right here at the 886, and our stop is going to go below that low, right? Like let's just say it's a 0.18% stop loss. You know, Jason Casper is good enough to get into those kind of trades. And so now you have your say you have your $1,000 account, so you do $10 divided by 0.0018%, and that's a $5,555 position. So you would have to use at least 6x just to get into that position because you only have a $1,000 account. So you'd have to use 6x just to get into this long position to have the proper position size. And if you get stopped out, you'll still only lose $10. So that's where it comes into play. Leverage. I mean, how did I learn Elliott waves? It was a combination of learning off of different websites, Elliott Wave International, but Coons Trading is one of the best Elliott analysts out there on the market. Love the guy to death. Super good human being, super good dude. And I learned a lot of my Elliott waves from watching him. And then really it was his recommendations of different books and websites that I went through and watched. Now I know that he does have an Elliott Wave compendium coming out soon, and he's been compiling this thing for like 2 years. He works professionally with Elliott Wave International, and when that compendium comes out, I do think it's going to be the best teachings on Elliott Waves in the market. So I would recommend getting that once it comes out. But Elliott Waves are a great tool to use. I think they're one of the best predictive price tools. We can never really truly predict where the price is going to go, but Elliott Waves are based off psychology, and psychology hasn't traded in hundreds of years for trading. And so I do think Elliott Waves are one of the best ways to predict what the market's going to do. Yes, Darren, thank you, man. I'll keep an eye out for that. No rush on any of that or anything like that. I know we're going into the weekend and everything, so yeah, guys. Speaking of that, I've been streaming for about an hour and 45 minutes. I will go for about another 10 minutes. So if you guys want me to look at anything in particular, let me know. As far as ETH goes, I do think ETH is kind of chopping around here. There's a potential we could go down to that 34.20 to 34.10 level. I would actually prefer that. As far as Solana goes, you know, Solana is still below the value area high of our big range, our big year and a half long year range. And yesterday, coming up, losing it, seeing the bearish backtest of it and rejecting was really bad, but we are bouncing from that 0.5. So if our double 1-2 impulse is going to play out, our big 1-2, 1-2, this is your third wave, and then we see a 4-5, 4-5, then that 0.5, which is your 0.5, but it's also your macro 382 of the entire impulse. That's kind of your level of support you want to hold. So the low could be in, once again, time-wise, Well, I guess time wise for this, it's aligning pretty nicely because you see your wave two retrace from the highs of two to the lows of two was only a day and 8 hours, and our wave four is already longer than that. Oops, I didn't even get that. It's already over that. So yeah, your wave four could be in, and we could be about to break up. Now, I do think that the next major level of resistance is at like 232. Yes, we do have a golden pocket at 216, and we do have some other levels at like 215, 216. But I think that 232 level is a good level to be watching here. And if we do, I think our impulse overall could end there. So we have our 1, 2, 1, 2, our big third wave. 4, I think we could reject on our first 5 at 216 and then see another 4 and then another 5 up to 232, finishing this whole impulse around 232. 232 to 235. I think we have a monthly level up there. We have a weekly, no, not a weekly, a daily up there. And we have a naked weekly point of control up there. So that box right there where there's a monthly, naked weekly, daily right there, I think that's our big area to be watching. Yes, thank you, Mark Dutch. Mark Dutch posted Kuhn's channel in the YouTube, and I really do recommend you check out Kuhn's trading for Elliott Waves. The guy is a billion times better than me at Elliott Waves, and if he ever has an Elliott Wave count that's different from mine, go with his. He's really great, and I've learned a lot from him. Now, he is strictly an Elliott Wave trader. I have learned to use pitchforks with Elliott Waves, which I've discussed with him a little bit actually on his live streams. And that's how I got into this 98.2K low. And I talked to him about it the second we got into it. I told him, I said, hey, man, this might be our macro low here, and we might be about to impulse up. And he was thinking 96K. But I did say, this pitchfork here, we're hitting into that midline, and, it was a key support resistance flip. He even discussed it on his next day stream and stuff. So I've learned to incorporate pitchforks in with my Elliott Wave trading, and he does not do any of that at all. So we both kind of put our own spin on things. And I love it, man. He's pretty much strictly an Elliott Wave trader. He does use support and resistances and naked daily points and controls and stuff like that. But I would say his main form of trading is Elliott Waves. His main substance is Elliott Waves. With me, it's a little bit different. I use Elliott Waves as kind of a secondary thing. And I'm looking at pitchforks, channels, Fibonacci's, things like that. Volume profiles are very important to me. So, yep. Yeah. Yeah. Jesus saves, right? It's all kind of a crap show, dude. Awesome, dude. And Jesus saves, I don't even know if you need to actually verify like KYC on BYDFI to actually you could do it without KYC. I'm not even KYC'd on BYDFI, and I have the account with them, and I've gotten my deposit bonuses and stuff like that. And of course I'm an affiliate working with them, but so I don't even know if you necessarily need to verify on BYDFI in order to get those deposit rewards, but I get if you want to. And even to get into the Telegram, I don't think you have to verify your account. You can just do an KYC account, a non KYC account, and still deposit the money and still get into the Telegram. So just letting you know that. All right, let's see. Total market cap, guys. Total market cap is rejecting from that area. We're rejecting from the top of the pitchfork band, or the top pitchfork band, and there is a potential we could keep rotating down until we hit that 382 or that 0.5, and that 0.5 is really what I'm looking at because that internal liquidity grab there at 3.58, so into 3.57. So this is why I do think that we could keep correcting on some altcoins a little bit longer. Mark Dutch, thank you, man. Thank you for tuning in. Thank you for always being such a good mod. Have a good weekend, bud. And I'm about to take off too, guys. So yeah, guys, hit the like button. I appreciate you all. Looks like there's not too much to discuss. Bitcoin did grab its range lows and it is pushing up. Watch that 118.3K area, where the golden pocket is coming up. It's also the back test of our pitchfork midline that we lost. We're coming up to that area now. That could be your local resistance. But if we get above that midline again, we've been holding that midline for about 2 weeks anytime we come down to it, at least on the daily time frame. So if we get back above that, it's just really going to look like a wick on the daily below it to grab liquidity. Like let me zoom out on this and we'll look at that real quick before we take off. So zooming out onto the daily chart, you can see that our midline has been holding, really, seeing a little bit of wickage past it, but no daily candle closes below it. So if we can, today, which was last night my time, but it's, we have 4 more hours before the daily close, or 3 more hours before the daily close. So in the next 3 hours, if we can get above 18.3, it will look like a liquidity grab of the range lows and then still maintaining support above your Pitchfork midline. I would say that would be very bullish, and that Bitcoin is probably going to continue now up to break to new all-time highs. So be aware of that 18.3 close. Let's close. If you're bullish, let's close above 18.3 by the end of market close at 5 p.m. today, or wherever you're at. For me, it's 5 p.m. So thank you guys. Have a good weekend. Trade safe out there. I will see you guys Tuesdays, Thursdays, and Fridays. I'll be streaming. I might try to stream on Sunday, but I'm not sure about that. We'll see. But just keep an eye out. If you turn on notifications, I try to schedule my streams ahead of time so you know when I'm going live. Have a good one, everyone. Thank you, and God bless. Oh, what's up, False Prophet? I see you're just getting in here. I'm just ending the stream, but